Tesla's up 22% today, and I want to applaud all of you for how patient you all have been throughout this process. We started heavily focusing on Tesla back in June. That's when we started opening a ton of call positions, and we believed that by the end of this year, Tesla would hit $300. And through the ups and the downs of this year, we have stuck to our plan. We have stuck to our numbers, and that is the only thing that I personally, as a professional, as a man, and as a trader, that I care about. The wins and the losses, whether we're going to be right today or not, doesn't matter at the end of the day. What matters is that you create a plan, you stick to that plan, and you never deviate from it unless your requirements to leave are met. And that is exactly what we did. Now, if we look at Tesla's chart, you guys know that for the past couple of weeks, we've been talking about this massive breakout that could occur over $300 into the end of this year. If we zoom all the way out on a weekly chart, you'll know that the first time that we really started to pay attention to Tesla was back when it started to show a bullish accumulation in June. If we take a look at our journal and just isolate Tesla alone, you'll see that we were not caring about it in the slightest until June because of that bullish accumulation. Once we saw all of this institutional buying happening as price was consolidating within this price level of about 190 to 180, we knew that the chances of price breaking through this white trend level would be very high. Now, in most cases, price is not going to just break out and continue to run in perpetuity. Instead, what will normally happen is price will pull back to test a support level. The area that it will normally pull back to is called our market bias. Now, this is why when we saw price pull back into the market bias in August, we decided to go long very aggressively. And if we take a look at August, you'll see that we were up about $600,000 on Tesla, and then we were able to pull about another $300,000 in profits from this move off of market bias back into equal highs. I teach all of these indicators and my exact strategy for free in the Elite Traders Playbook course, which will be in the description. All of our courses are free, and I'll put a link to them all down below. Now, since we bounced off of that support level back here, price ran up to meet that equal high, and now we have what's called a liquidity level forming basically between $260 to $280. Now, the more times that price will tap or touch this liquidity level, the higher of a chance that that level will be taken out and that price will break out to all-time highs. You'll see as well that we have a pattern in technical analysis that is very reliable called an inverted head and shoulders pattern. This occurs when price sells off into a low, bounces to meet this equal area of resistance, sells off into a lower low. This is where the head forms. And instead of coming to make a lower high, price actually comes all the way back up to reach that old resistance level. We pull back one more time, but not into a lower low, into a higher low. This higher low is very important because it's signaling that buyers are stepping in prematurely, and that is a sign that it's not going to make a lower low and that price should bounce. In most cases, after this right shoulder forms, price will finally sweep the liquidity level or break through this liquidity level, and that means that price will break out up to 300 or even into Q1 of next year, 340 and 360. Now, I have a massive position in Tesla calls for December 2026. And what's crazy is I was up $500,000 today and I'm barely even on these calls. I actually went through and opened up a hedge position, some puts today that I took a $12,000 loss on. I wanted to not close out my 2026 calls. I ended up taking a put on here and actually closed it out. Now, I want to explain to you why I opened up my hedge position and then why I closed it out specifically where I did. We talk about these smart money levels a lot here on this channel, and we have a free smart money course, which you guys can learn how to draw out these levels on your own. But you know that these areas are very strong areas of institutional buying. That's why we are expecting price to bounce on this smart money zone between 214 and 220 into earnings, or price was going to snap that level and move back down to worst case 180 or 190. But both of these levels are huge institutional zones and normally where buying will accumulate. Now, the same thing can be said to the opposite side. In this case, if we take a Fibonacci retracement from swing high down to most recent swing low, you'll notice that our institutional zone and our smart money zone is sitting right between 254 and about $253. This is why today I opened up a put right as soon as we hit that $254 level, and my goal was that if we rejected, I would hold on to my put back down to 230. From there, I would close the hedge and I would just continue to hold my 2026 calls. Well, instead, we blew right through it, and I did trigger my stop loss, and I walked away from the trade. Now, in the short term, a lot of people are worried if Tesla could reject, and honestly, it still could. I mean, structure in this case is not actually broken until we take out this high. If we can take out 262 and 264 tomorrow, that is a break of structure to the upside, and that will show that we're not going to pull back at all from here. However, if price rejects here, which I think there's a pretty good chance it will, then I think price could pull back down to 240, worst case $236, before we bounce and move our way back up to 300 by the end of the year. I hope this video helps. As always, if you guys want to trade with me each and every single day and get access to all of my trades and our private academy, you can go ahead and join. The link is in the description. And if you just want to learn how I trade, you can go ahead and get all of our courses. They're completely free. They will also be in the description.